Indonesia's new president, Joko Widodo, has many challenges ahead, as the country's economic growth fell to the lowest level since 2009. Now, this was caused by a drop in exports and government spending. I'm joined on the line by Wellian Wiranto from OCBC Bank. So, Wellian, will you cut your full-year forecast as a result of the disappointing data? And how do you think Joko Widodo will manage to boost growth?
Well, first of all, I think growth will indeed come down for 2014, just because the first half of the year that has already we've seen the data for actually surprising the low side. For the full year, we're looking at 5.4%. That's a significant drop from 5.7% that we expected at the beginning of the year. As you mentioned, slower exports, coming down of government spending have been the main factors in that. Now, in terms of what to expect looking forward, as Joko Widodo, which is also called Jokowi, comes into power later this year, I think quite a few things that he can do, including cutting fuel subsidy, basically boosting investor sentiment. I think in order to boost business investment going forward, those stuff would help to put a floor in terms of economic growth. He has a goal of reaching 7% economic growth. It seems like quite a distance from now, and indeed we wouldn't be able to reach there just anytime soon. It will take at least a couple of years, but I think the trajectory from now on will be a positive one.
Indonesia's consumer price index accelerated at a slower pace in July, allowing the central bank to continue its monetary policy. Now, the head of the National Statistics Bureau said inflation during Ramadan and the Islamic festivity is actually considered low compared with those in the last 5 years. Now, what do you think?
There is some truth in that statement. Indeed, usually during the festive month, which we just passed, sequential inflation, which is a month-on-month inflation, tends to be quite high. Indeed, usually above 1%. The most recent one, we only saw 0.9%, so it is lower. More importantly, in year-on-year terms, we saw the CPI inflation slumping quite heavily from 6.7% of the previous month to just 4.5%. That has to do with the base effect, given that we've passed now the year-on-year effect from last year's fuel price hike. So I think going forward, we still see inflation coming down. It is never going to be a big issue for Indonesia this year, although the risk remains if El Nino effect comes in and the food prices pick up again, then we might well see another pick up in inflation. But for now, I think the baseline is for inflation to stay fairly low at 4 to 5% and average of 6% for the year.
The rupiah weakened as the trade balance returned to deficit. Now, do you expect the trade deficit to narrow in the coming months?
On a relative basis, yes. I think month in, month out, you're going to have a situation where sometimes you have surplus, sometimes you have deficit. But to the extent that there seems to be some loosening of the mineral ore export ban, the government started early this year, with companies like Freeport being allowed to export copper again. I think it will help to narrow the trade balance. But nonetheless, at a broader level, current account deficit will continue to be an issue for Indonesia. And indeed, because of that, we don't see a high chance of the central bank being able to cut their policy rate just yet, because they want the trade deficit to return. They want the trade deficit to correct itself, i.e., for the current account deficit to become less an issue going forward.
Wellian, thank you very much. It was a pleasure speaking to you today. Well, viewers, we have plenty more just like this heading your way. So see you very soon.